1 SPX 0 DTE option trade. $2,060 profit per option contract in less than 30 minutes. But the important part isn't the dollar amount. The important part is that this trade came directly from a rules-based trading framework using two indicators: the Day Trading GPS SPX Daily Key Levels Indicator and the Day Trading GPS Ribbon Indicator. No guessing, no subjective trend lines, no trying to predict where the market might go. Just objective price levels, confirmation rules, predefined stop locations, and predefined profit targets. In today's video, we're going to walk through the exact setup, the signal that triggered the trade, the confirmation required for entry, and how the position was managed from entry to exit. Let's get started. At the close of the 9:36 a.m. candle, SPX closed below the bull-bear key price level for the session at 7532.93. At the same time, the ribbon indicator turned fully red and the lower ribbon bands began separating away from the ribbon base, indicating bearish momentum expansion. That combination provided both the signal and the confirmation required for a bearish trade entry. Because the trade was triggered from the bull-bear key price level, the standard option selection process within the daily key levels framework called for using the option strike closest to that level, which was the 75.35 put option. The ask price at the close of the 9:36 a.m. candle was $17.90. By 9:58 a.m., that same option was worth $38.50. That's a gain of $2,060 per option contract in just 22 minutes. So how did we know where to enter, where to place the stop loss, and where to take profits? Let's break it down. To understand the trade, there are only two things you need to know. First, each morning before the market opens, the SPX Daily Key Levels Indicator automatically analyzes the SPX market and calculates a series of critical key price levels for today's trading session. At the first tick of the 9:30 a.m. open, it plots the key levels on your SPX chart. Second, every trade entry has two requirements. First, a candle close above or below one of the indicator's main key levels, and second, confirmation from the ribbon indicator. One of the most important main key levels generated each day is the bull-bear key price level, also known as the BBKPL. The BBKPL acts as a major decision point during the session. When price closes above it, the market is showing bullish strength. When price closes below it, the market is showing bearish strength. However, a candle close above or below a key level alone is never enough. Every trade entry also requires ribbon confirmation. For a bullish trade entry, price must close above a key level and the ribbon indicator must confirm with an all-green ribbon. Ideally, the upper bands of the ribbon should be starting to separate from the ribbon base, showing momentum expansion. For a bearish trade entry, price must close below a key level and the ribbon indicator must confirm with an all-red ribbon. Ideally, the lower bands should be pulling away from the ribbon base, showing momentum expansion. No ribbon confirmation, no trade. Now let's go back to today's setup. At the close of the 9:36 a.m. candle, SPX closed below the bull-bear key price level while the ribbon turned fully red and the lower bands of the ribbon began pulling away from the base of the ribbon. That provided both the signal and confirmation required for a bearish trade entry. For risk management, there were two stop-loss options available. The first was the tighter stop-loss using the QL level above the BBKPL at 7536.62. The second was the standard stop-loss using the first midpoint above BBKPL, the mid-BBKPLR1 level at 7540.32. The profit target framework is straightforward. For a scalp trade, the objective is a one-level move in your favor. For a regular day trade, the objective is either a minimum 1.5 level move or the ideal 2-level move. Since this was a bearish trade triggered from the BBKPL level, the minimum 1.5 level target was the mid-S1 S2 level. That target was reached on the close of the 9:46 a.m. candle. The bid price at that time was $29.60. Profit, $1,170 per option contract. The ideal 2-level target was the S2 level. That target was reached on the close of the 9:58 a.m. candle. The bid price at that time was $38.50, which translates into a profit of $2,060 per option contract. And the key takeaways: the entry signal came from a close below one of the indicator's key levels for the session. In this case, it was the bull-bear key price level. The confirmation trigger for entering the trade came from the ribbon indicator. The stop-loss locations were predefined before the trade was entered. The profit targets were predefined before the trade was entered. And the trade management process was predefined before the trade was entered. The framework remains the same whether the market is bullish, bearish, trending, or range-bound. The goal is not to predict where the market might go. It's to follow a repeatable process for day trading SPX options built around objective price levels, confirmation signals, rule-based entries, and structured trade management. That's exactly what the SPX Daily Key Levels Indicator and our Ribbon Indicator were designed to provide. If you'd like to learn more, you'll find additional videos linked in the description below that cover the complete Daily Key Levels framework, including support and resistance key levels, contextual key levels, option strike selection techniques, daily market structure analysis, and advanced trade management rules. Those videos also explain how to adjust stop losses as a trade progresses, de-risk positions, scale out at predefined profit targets, and manage remaining runner positions when the market continues beyond the strategy's minimum target objectives. For example, while today's trade reached the ideal two-level target at the S2 level by 9:58 a.m., the bearish move ultimately extended 2 additional key levels to the S4 level by the close of the 12:42 p.m. candle. At that point, the 75.35 strike put option was at $89.60 on the bid. That represents a profit of $7,170 per option contract on any remaining de-risked runner position held beyond the initial target objectives. Those advanced trade management techniques are covered in detail in the videos linked in the description below. For traders who prefer using lower-cost alternatives to using at-the-money SPX options, those videos also explain how to select appropriate out-of-the-money option strikes, as well as lotto option strikes for both bullish and bearish trade setups. There is also a separate features overview video that walks through many of the advanced capabilities built into the SPX Daily Key Levels Indicator, including historical review tools, customization options, market structure analysis, and additional functionality that we did not cover in today's trade breakdown. Thank you for taking the time to watch today's video. If you found the content helpful, please click the like button and subscribe to the channel so you'll be notified when future videos are released. If you're interested in either purchasing the SPX Daily Key Levels Indicator by itself or the SPX Indicator Suite, which includes both the SPX Daily Key Levels Indicator and the Ribbon Indicator, go to daytradinggps.com. To request a discount promo code, email us at daytradinggps@gmail.com. For those interested in seeing how other traders are using the indicators and the Daily Key Levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. You can view additional customer reviews and feedback at daytradinggps.com. Thank you again for watching.